my end as well. There we go. All right. So welcome everybody. This is Wednesday of the Women in Trading event, March 3rd. So thank you, Anka, and thank you, David, for coordinating this. And thank you everyone for joining us today. I see we've got a bunch of people on. If you do have any questions, please feel free to go ahead and put them in the chat. I am going to be talking about the big money of the market. I know Anka definitely follows big money, as well as Stephanie Kammerman. And I do also work with Stephanie in the training pit. But let's get into a little intro, and then we're going to go right into the big money aspect of the market. All right, so if you all are new to me, I am Jane Galena, also known as Airplane Jane in the trading world. Yes, I am a pilot, and that is where the name came from. So I am pretty much accessible on Twitter, Instagram, YouTube, LinkedIn, Facebook, my website, cjanetrade.com, also one of the leaders at Ticker Talker, and you are always welcome to email me if you ever have any questions at jane@cjanetrade.com. All right, so a little bit more about myself. So I first started learning about trading around the breakfast table. Literally, this is my family. My dad would be reading the Wall Street Journal first thing in the morning, and we would be asking questions. I was a curious little girl. Dad, what's the PE ratio? What's this high? What's this low? And slowly but surely, I started to learn about value investing, which of course is going to be that longer term bullish momentum in the market, but it's not as hands-on as day trading. And I was an international business degree graduate in Memphis, Tennessee, and my first job was working at National Bank of Commerce. Now, I'm originally from Washington, D.C., and that was a little boring to me, right? I thought, you know what, this is a smaller town. And so, you know what, I decided I really want to pick up and I want to move to a bigger city like Atlanta. So I packed up my stuff, found a job, found an apartment, and I just went for it. So I ended up going to Solomon Smith Barney. At the time, it was the dot-com bubble back in 2000. And I ended up saying, hey, you know what? I've got to pay for my rent. I'm going to go to the big money jobs with Smith Barney. And I was working at the Pinnacle building right in Buckhead. And slowly but surely, I was learning all about trading. I got my Series 7. I was working with 4 different brokers as a registered assistant. And I ended up getting my Series 7, falling in love with the market, but then I saw devastation happen. And I was given notice of being laid off. It was voluntary though, because they were trying to eliminate people. And I thought, you know what, do I really want to follow in these 25-year brokers' footsteps, seeing this devastation happen, seeing people lose their homes, seeing people lose their college funds for their kids because they took out margin on a dot-com stock, WorldCom. And they ended up, losing everything. And so I thought, you know what, I really want to move forward with another passion of culinary school. So I went to culinary school in Europe. And then I came back to the States. I was working in Philadelphia in aviation, and I met my husband there. So where was he from? He was from Canada. Well, what happens when you fall in love? That's right. I immigrated to Canada. I was now married, and I kept my job in the aviation industry. Lo and behold, less than a year after we're married, I find myself 8 months pregnant, and again, boom, another layoff notice. Now, these 2 layoffs of my life, I know this could be touching a note for everybody because many people are dealing with this sort of scenario with the pandemic and what's happened. And it ended up being the best blessing of my life, learning about the stock market again and really going full force into it to be a source of income for my family. Now, a mom of two, I work from home, and it's a true blessing. So let's get more into the presentation. Enough about me. Let's talk about the market, because that's why we're here. So really, the big money of the stock market is really what runs the runs the market, right? They're always putting their money to work in the stock market. And so it's important to know what they're doing, right? We can see this multiple different ways. There's volumes in the prints that will show where the money is flowing. I know that Stephanie presented yesterday and gave you a little bit of the dark pool, so I'm going to touch on that again today and look at some bigger indications of what we might see in a specific area. And then we have the big hedge funds. They made billions during the pandemic. Do you think that they might have known and maybe they sold at the top and maybe bought at the bottom and knew that all this was going on? They somewhat can create the momentum of the market. And how can they possibly do this? Well, it comes back to basic supply and demand, right? When we are looking at the stock market, it comes back to when that money, the really big money of the market, is buying, it drives up the demand. And then that drives up the price. And so many times what we will see is we'll start to see that we have some volume down here, right? And then the price goes up. Now, it's never just a straight line like this. You know, sometimes it'll be like this and it comes back down, and maybe this is a moving average and then it comes back up and then it comes back down. And what ends up happening is we might see, you know, more little volume candlesticks here. We have a bigger one at the top. Okay, maybe it's a little bit of profit taking, not a big deal, but we're still overall, and maybe we have more down here at the bottom when it hits that moving average. So as we start to see it moving up, we see that they're continuing to buy. And a lot of times on the chart, you'll find that you'll see that area of consolidation down at the bottom, right? Maybe we have this drop down here. We see all this volume, and then all of a sudden it breaks above that resistance and up we go. The price continues to the upside and it just drives it up. Sometimes we'll see this happen for a shorter term period, 2 weeks, 3 weeks. Sometimes we'll see it for an earnings season and it'll be an entire move. Sometimes we'll see it happen, say, for a year, right? It has to do with seasonality as well in the market. That seasonality can truly play a role because there are some people that will trade solely on seasonality in buying, for example, potentially buying options based on seasonality when they start to see massive volume. Now, on the flip side, when the big money is selling, it's going to decrease the price of the stock, right? So we come up and we're at the top up here and we see this supply. Well, all of a sudden, we might see it go like this, and slowly but surely it goes over, and then we see a drop. Or what we could see is that, hey, you know what we start to see happen? We start to see that we have an area of sideways price action, right? And that sideways price action can tell us that maybe the big guys are getting out or they're getting in for another big move to the upside, right? It's not guaranteed that if you see that sort of consolidation at the top, that is going to be selling. Sometimes there's simply just stocking up even more for it to continue to the upside, because maybe there's going to be a short squeeze, maybe they're covering a short position somewhere else, maybe they're hedging from some area, and they are placing a trade, basically. So when we see that sideways price action, whether this is on the shorter term time frame of a 5-minute chart or a 15-minute chart or a daily chart, really that shorter term time frame, maybe it's just going to be a trend change for the day. If we see it on the bigger time frame, the daily or weekly chart, this could be a huge change in direction for that stock or that sector overall. All right, let's look more at some stocks, and I'm also going to touch upon where we really see it, right? Because I did mention we see it in the volume. So here I have the SPY chart, right? And I know that there's so many people out there. I have a lot of students. I do one-on-one training. And, you know, I've been talking to a newer student that might not have the experience of reading that level 2 chart. And what ends up happening is there's always another way to be able to analyze this data, right? Some people like to watch the volume histograms on the side of their charts. Some people like to have the volume at the bottom, right down here. And some people aren't able to see the level 2 in real time. And so breaking it down into a smaller time frame will allow you to see where that volume is also coming in. So I'm going to show you that free little tip as well, if you're not used to reading the level 2. So this is TradingView. This is a free charting platform and pretty much has data feed from around the world. So this is my personal favorite, and their charts look exactly the same on your phone. So as a mom of 2, this week my daughter is on spring break. So I set everything up in the morning on my chart, and I have my alert set, and I can use it on my phone. So just a little side note there. So here we started to see price action setting up. We saw massive volume January 31st. It looked as if it was coming back to a moving average and then bounced. And then lo and behold, we dropped like crazy, right? And that big volume starts to paint the picture of what's going on. Where are these candlesticks and what is happening when we go below them and go above them? Well, here we had a massive day, right? So you can set yourself up for success with trading simply by doing something as simple as this. We have this super high volume, right? Well, guess what? We went below it. Okay, that was likely selling volume right here. Massive volume candlestick, likely selling volume. Again, this one up here, right? Very influential. Even if you don't have access to the dark pool prints, which I will show you a free way to get access so that you guys can see this as well and be able to track them. So here we have this crazy day. Well, it looked okay. Here we go. We're going bullish. Awesome. And then inside day from here, boom. Where do we go? 291 down to 263. So we're looking at already like 10% in a matter of 3-4 days. I remember this was crazy. We were getting circuit breaker halts, you know, every other day on the market, which was pretty crazy at the time. And we saw crazy massive volume coming in here. We saw 55 million up here at 289. 55 million shares of the SPY is roughly $16 billion. That is going to play a role in the market. That's going to play a role into what happens. Now, it's not every day that we see this sort of information. However, it is amazing when we see it happen. And it's not just on the SPY that we see this happen, but we also see it happen on other stocks as well. So simply, if you start to notice on stocks, one that maybe you're following, one that maybe you're invested in longer term, and you see, oh my goodness, there's this crazy massive spike, I'm going to take note of this candlestick. This is very important to pay attention to. So you want to read this on the bottom. Now, I did talk about saying I will show you on a 2-minute chart. Let me clean this up a little bit, get rid of some of this stuff. I'll get rid of some of my moving averages. I do use a lot of moving averages. Some people call it spaghetti. So if you go down to a 2-minute chart, if you're an intraday trader, oops, sorry, that was 2 months. If you go and you're an intraday trader and you look at it, all right, well, it looks actually like we've had you can see the volumes descending throughout the day, but here's a pretty influential candlestick right here, right? This one. So let's move this. This is my levels that I look at on the day, but we have this candlestick right here. All right, so on a 2-minute chart, where we move from here, interesting, look, we pretty much based out as support, roughly 384.60, down just a little bit more, right down here. So 384.40. Hey, look, we had more volume coming in. We have this rough base right around here. So that's going to be influential throughout the day. Look, we have higher volume candlestick here, and it looks as if maybe this is going to be our upper bound that we need to watch throughout the day. Look at that. They just take it up, a little bit bounce up. Let's test the high, come back down. Okay. And we're just going sideways in here. As I mentioned before, that sideways price action intraday, not the best to trade, but usually leads to high volatility later. It leads to that bigger move to happen, right? And if we watch it and we track it, okay, so likely there's going to be a great momentum trade. If we break out up above, this is at 385.89, let's put it at 386, right? And just below, this is 384.50. So 386 and 384.50, likely after we break out of that zone today, we're going to see that there's going to be a bigger move. Now, let's look at our 24-hour chart over here. Where was the big crazy volume that we've seen? And let's check how comparable it is, right? How much volume, where did we have this much volume before? Right here, when we were testing this blue trend line. Usually I'll draw trend lines from the bottoms, but I drew this as a top, and it seems like we're somewhat hitting that top. We were bouncing below it over here. We broke below it, and maybe that was their sell signal right there. So these candlesticks on the daily chart, these two are going to be that big signal, right? If we go above 392, hey, I'm going to be full on bull for the SPY. And we go below the low over here of 379.50, full on bear. And that's simply by reading the volume of the charts, right? Now, I'm not sure if Stephanie showed you this, but there's this cool tool, Pro Live Vol. This is their core program. And I'm going to shut this, and yes, and I'm going to shut this right here. Yes. All right. So what do we have? We have the underlying trades. I'm sure that Stephanie talked about the signature prints that we see in the dark pool, right? Every single trade that we have has a confirmation to it. Whether you do it, whether I do it, there is a record of each trade. Now, the dark pool is going to be where these big major hedge funds are going to place their orders. Why do I say that? Well, this is from yesterday. We'll look at yesterday's information. So yesterday, we had 1.3 million at 389.16 and 1.2 million at 388.82. All right, so if I wanted to place 1 million of a $388 stock, we're looking at $388 million. Do you have that in your back pocket? I don't have it in my back pocket. So this is the big money of the market right here. And this can be very, very influential in being able to see where the money is flowing, right? Where are we seeing this money playing out and moving from one area to the other? These guys make money while they're sleeping. They put their money in the market, they rotate it around, and they make it move and earn money for them every single second of every single day. So watching this and tracking this is huge, right? This is like knowing what people hold in their hands if you're playing poker, right? If you knew, hey, look, they've got an ace. They've got an ace, excuse me, I hit my desk, on the SPY. at 380, whoops, sorry guys, at 389.16 and 388.82, right? We see that they have shown their cards, right? They are saying we've got 2.5 million that we sold yesterday. Now let's check about today, right? Let's look at the current time and what is happening. Okay, well, let's sort it like here, right here. 300,000 at 384.69. Okay, we're above that. These are late from yesterday. Oh, but here's a real-time one, 384.69. All right, let's see how many they bought at the bottom. Okay, 383. I need to change the filter on this. Sorry, guys. Let's check it really quickly. I usually have it at 25,000. That's what I like to sort it at. So, okay, look at what they were buying at the bottom today. So 384.46 is going to be important. 384.54 is going to be even more important. Look at that, 384.54. Now, without seeing those prints, that's the support that the chart was showing us, right? So even without the prints, you are able to still read the chart and say, hey, look, we have volume that's coming in right here. We have more volume that's coming in. We have more volume that's coming in. And reading the bottom of the chart is going to show you where that big volume is coming in. Now, I did mention that you do have a way to check this out for free. You do have a way to look at this for free. And it's at thedarkpools.com, free trading room, right? And I'm going to show it to you live. Let's see, free trading room, click right on it, enter the free trading room. I've already logged in. You do just set up a little free account and it will show you. We have the chat right there. And you're able to actually see all of these prints coming in. Look, we have one on EWJ. We have some coming in on SQQ. We have one on DEN. All right, let's go check out DEN. Let's look at this and see what is the normal for DEN in a day. All right, do you see that there's this crazy volume that came in today? When was the last time that we had that? Never. Right? You're able to see as well, aha, here we go. Let's break it down even more. Let's go down to a 30-second chart, right? Let's look and see. Okay, looks as if maybe that was late buying. What's the price again? 44.75. All right, 44.75 down here. So these dark pool prints are up to 3 hours late. So you see, why does it have this weird spike all the way down here when it was trading here at 10:20 in the morning? Well, because they don't have to send that confirmation until that last share has been filled and 3 hours after it. So as I mentioned, we've got we have 1.55, right? DEN, pull it up here, 1.599 million shares. And these shares came in at 12.40, but it wasn't trading there, right? The price action is up above it. So likely that was buying, right? We don't know. It's at the top. This could also be selling at the top. So not quite sure, but we need to pay attention to today's candlestick for Denbury. This is oil. Okay, we also had oil numbers that came out and it was negative 25 million. Another great free little tool here, Forex Factory. This has all of the daily global announcements, right? So when we have all of these global announcements, hey, look at the volatility. Orange means that it could be quite volatile. All right, so we see this is due out at 10:30. The numbers are red. That means there was a surplus. That's not going to be good for the price of oil. And we see that we have something in the oil sector that now just had a major print. Oh my goodness, there's a good chance that this could potentially be selling, but I'm not going to assume. I'm going to wait to see what happens to the price action, right? Maybe they are going to continue to take this to the upside. However, never in its lifetime has it had this much. And let's just see for fun over here. I also tracked the float, 49 million. So 1.5 million, we're talking about 3% of the float was traded today in that one print. Now, maybe that was a hedge fund getting out of their position. Maybe that was a short covering their position. They said, you know what, if it gets up to 45, that's it, we're getting out. And then they covered a short position because maybe they got in slowly over time. Maybe they were slowly buying, right? Maybe this was them buying, this was them buying, and hey, this was them selling, exiting the position. Nice little profit from 26 up to 44.75. Let's lock that profit. Let's move it somewhere else. I also want to show you all another tool. Oh goodness. Sorry, I lost my tools here on my other chart. So that with this other tool, you're able to track not only the volume, but you're also able to track what is happening with the high frequency algorithms. So when you have these prints, you understand the concept of the prints. This is the big money of the market that's moving the market. Back in the 1980s is when the dark pool exchange was set up. And with that dark pool exchange, we see that these prints are hidden, but also in the 80s was when the algorithms first started being developed. So this is another tool that I use personally, and it's Flowtrade. What's amazing about Flowtrade is that they show you the prints. These are prints on Apple. These are prints on the SPY. And we're able to see, oh my goodness, hey, yes, this is the algorithm that is selling. The high frequency trading algorithm is selling, but it's down to the minute. Hey, look, they started buying right here. Now, just because it's down at a complete extreme, this does not mean that this is the price action necessarily. It's just showing you the algorithmic trading. Now, sometimes you'll see that this goes all the way to the floor or all the way to the top. And so that's extreme buying or extreme selling. Okay, I see we have a question about Don F. About the 1.2 million. Do you know if that is part of a hedge trade? And you have to know what they might have also sold also. So Don, with that 1.2 million, I believe you're talking about the SPY. When we were looking at that, here's the thing. Even if it was a hedged trade, it's still going to move, right? So it's still influential to track. And here's something that's really cool too. This is new, this is a bar divergence. So when we're looking at this, we have these dark pool prints that have gone on. You can also add all of the prints. Okay, so this was the market open 931, and this was one that happened at 122 today, 351.61. And these are all the dark pool prints from today. You can see we are above, the top one is at 385.34. So if we go above 385.34, let's go back to the SPY over here. What was the top that I said over here? 386. No, I had this down further. Oh no, I did say 386. That's that when we look at this, 385.34 was the highest of the dark pool prints from today at 1218. If we go above that, we can see that they were buying right here, right? We see buy pops, and we have these divergence. So what do I mean by divergence? I'm sure you've heard about MACD, and I'm sure you've heard about RSI divergence. Well, this is an algo divergence. In other words, I turn on the divergence indicator right here. Where we get the green is where the algorithm has been buying, but the price action is dropping. And so here we have a $60 bottom and a top of $60.90. So likely they're going to pop this back up to $60.90 before the end of the day. And we see that we have dark pool prints that are up above, right? But about 9 times out of 10, they bring it back to that point of divergence. And so having this tool, being able to track the algorithms and the dark pools is just mind-blowing. Let's look at XOM for today. So XOM, another one that's getting this bullish indicator, Boeing, VTV, yeah. So we see, here's a perfect example. The price action was dropping. What did it do? It came down to 57.75 and it bounced up to 57.92. Came back down again. They were still buying and they brought it up. So you can see this actually provided 2 different trade opportunities with that divergence. All right, I sort of digressed off of the dark pool prints over here. So when we look, okay, XLF, awesome. Now, not all of these prints are going to be crazy prints that we pay attention to, right? It's these small ones, not so much. But let's go and look at silver, right? Silver has been on the spectrum for everyone for weeks now. Wall Street Bets was talking about it. And truly, the big guys of the market are truly manipulating this. There's an amazing video out there talking about how the banks that are managing silver have actually shorted the futures market to the point of having to pay up 29.5 million total ounces of silver. And right now, what is so crazy is that all of these prints, not all of these prints, all of these contracts, the banks have shorted the shares of silver and put them short in the futures market. But now the industrial use is so high for silver that the silver market is trading for physical silver at 30, 40, 50% above the spot price, while the digital price is being held down. I'm going to pull up the image right here. All right, so this is, as I mentioned, this was taken from the CME Group website for the silver futures, right? So this intent date was last Thursday, right? For delivery date of Monday. The H is going to be the house account for Goldman. 29,000 contracts short that they have to pony up 2,900 times 5,000 ounces, right? And the next biggest one is HSBC. They owe 5,000 ounces times 700. So when we look and we're looking at this and we go to, let's see, JM, I'm just going to pull up a very quick silver. So here, you guys can see I work with lots of windows, huh? That when we look at this, yes, the silver price is being held down right now. However, should you go to, for example, a Canadian maple leaf, This one doesn't show me the premium, but this is 1 ounce, right? We have a troy ounce that is equal to 31 grams. Here is what the future price is right now, $26.42. If you want to buy physical silver, right now it is much higher. It is trading physically for $10 more an ounce than for what it's being asked on the contracts, on the futures. And that comes back to this manipulation of the digital asset of the silver futures contracts. Before, people weren't really taking delivery of silver, right? They were simply using the contract to trade, but they weren't necessarily hedging for industrial uses. And now silver is the most highly conductive, the most highly reflective, the cheapest, one of the cheapest metals out there for industrial purposes. And so people are actually buying future contracts to hedge the price for their industrial production. So what has happened is now the futures are so short. These banks, this total 5,900 contracts, let's do it really quickly, right? Clear. 5,900 times 5,000 is 29.5 million ounces of silver that needs to be handed over to whoever bought these contracts. And that is where the price of physical silver going up in value has actually come from, because people are aware that the digital price is being held down. The demand is not being reflected. We have seen massive prints on silver, right? Let's go to this day. Let's go to February 1st. So today, February 1st, SLV. It's going to take a second to load there. We'll look at this here. So when we look and we see, all right, where did we have this big volume? Back here. Last year, from March 20th through until July, right here, the dark pool was printing prints. They printed for 3.5 months. Once it was done, they shot it up. They took it from 17 to 27, 28. All right, we're in this slow grind up again. This was the day that Wall Street Bets, February 1st was when Wall Street Bets said, hey, there's going to be a massive short squeeze. Now, they do their research to see where the big guys have been shorting. And they look at it and they say, you know what? Yes, we see there are more contracts, right, that are owed and that must be paid out. That is going to drive the physical price of silver up. And it has, to the tune of $10 more. So $10 over that, it's 40% premium on physical silver right now. All right, let's look at these prints. Look at all of these prints from February 1st on silver. 470,000. I'm going to sort it by size. Excuse me, 806 million. These are opening. Don't really care about that. But 1.7, 1.4, 1 million. This is not something that we see every day on silver. And to show you that, I'm going to bring you to today. We don't see prints of that size every single day, right? So when we look at this and we go, okay, 26, let's go back to, see if I go backwards, if it'll, oh, sorry guys. I thought it would bring me to that page. So when we go back to silver and we see, 26.47, right? At close, there was massive prints. If we go above the closing price here, 26.40, set an alert. We know that likely those big money prints are going to get squeezed. big time. It's also running in this channel, goes up, comes back. Hey, it was up outside of the bounds. They sold it off. Let's see, where are we starting to get the volume? We have a little bit of volume here. These are volume weighted anchor prices right here. So I can adjust it. Hey, we're below the volume weighted anchor price from all of these lows. Let's see if we're above yesterday's. No, we're below yesterday's. So it looks as if they're still continuing to short the physical price of silver. Now, what's interesting as well with SLV is that SLV, the shares can be redeemed by banks for physical silver in the vault. And PSLV is where retail traders can buy shares and redeem them for silver. So let's go and check really quickly and see. Oh, we have silver is crossing up 24.41. So when we see this massive volume, right, we're below this. We have this support level. Well, they broke that support level, but let's check and see. I've not signed in twice. Oh, yeah, I did. Oops. This could be very influential, sorry, to watch. Hey, are we going above 1030? Well, maybe we're going to head on up to 13 and we're going to take a nice 30% profit on physical silver. We're already seeing that these do not actually reflect the true price of silver in the free market being traded hand to hand. People are buying it at a premium in real life. And so manipulation of the stock market is out there. It is out there in every single form, in every single stock above $5 usually. The ones below that, the hedge funds cannot really hold. They're considered penny stocks, and those tend to be really moved by the retail traders and the retail traders that have the largest money. As I mentioned before in the beginning, that the big money is really the ones that drive the market, right? Whether it's a penny stock or whether it is a large cap stock, it's the biggest money that's going to win. And when we look at it, why not follow that big money and have them at your back? They can settle the futures in cash, Danny. However, as somebody that could buy a futures contract, you can stipulate that you would like to have silver delivered and not cash. So it is possible for sure for them just to pay you the cash if you are in the money for your contract. However, you have the right, just like with an option, to exercise that to buy the physical silver. All right. So I just wanted to wrap up today and let you guys know, if you ever want to check out my website, it is cjanetrade.com. And I do teach in the training pit. I am one of the trainers and educators there with Stephanie Cameron on the dark pools, on new traders, setting up your accounts, learning all about trading. What is a stock? What is a future? What is options? All of those great lingos. And we actually have a free webinar going on tomorrow night at 8 p.m. Eastern. And you can sign up at bit.ly learn more pit about the training pit. And I also have an amazing terminology video that I like to call step one for traders, because if you're getting into trading, you might be brand new to trading, that you can start off first with the terminology so you understand the language. And that is going to be 50% off through the beginning of March, through the end of March, for all of these women in trading events. You know, there's nothing better than being able to educate yourself and work from home. I've been doing this now. My daughter was 6 months old when I started day trading, and now she is 6.5 years old, not months old, 6.5 years old. So I've been doing this 6 years. You guys can probably tell I have a true passion for it. And when you have a passion about your job, it's not work. It is pure fun and enjoyment. So check that out. Also, I am one of the leaders I mentioned at Ticker Talker, and I do offer trade alerts every day of the trading day. So it's 320 trade setups for $19.99 a month, and it's pretty reasonable for trades that you can profit off of roughly 80 to 90% of the time. As long as you wait for that level to be broken, you are able to profit and see and learn from them as well. Most important thing is learn and paper trade before you actually start putting money into the market, as the market does not care if you know what you're doing or not, and it will easily take your money if you're not educated and you do not have the discipline. So I love to wrap up all of my presentations with carpe profit, seize those profits one trade at a time. And if you all have any questions, put them in the chat right now. I know I've got to leave a couple minutes for David to transfer over to the next panelist. But if you have any questions, please put them in the chat, or you can also email me, as I said, at jane@cjanetrade.com.
Hey, Jane, thank you. Awesome presentation as usual from you. So thank you so much for accepting our invitation. And we are looking forward to seeing you again
Thank
soon.
you.
All right, so guys, you know where to go to take advantage. The Trading Pit is actually having a free webinar, and I saw your Stephanie's post earlier today. You guys have a free webinar from 8 p.m. to 9 p.m. And all the moderators, I think, in the room will be joining. So it's going to be a power-packed presentation. So make sure and head on there. Ticker Talker, and she's on Ticker Talker, trade alerts, beautiful setups. Take advantage of them. Tickertalker.com, marketplace. You see Jane's picture, just hop on there. And of course, trading terminology is so important. So you can have 50% discount, $50 just through March. So take advantage of that. Thanks so much, Jane. Awesome presentation.
Thank you, Jane.
I'm pretty sure, David?
Yeah, I was just saying, thank you, Jane. Thanks for being here. Great presentation.
Yes, thank you guys for putting this together, and looking forward to next year, hopefully in person.
I hope so. Yeah. Fingers crossed, Jane.
Awesome. Well, we'll make it happen, Anka. We'll make it happen as long as we can travel.
Should we do the Vegas? Yeah, should we do the Vegas? Well, I know David likes Vegas too.
I think we should definitely do Vegas. I think we
should do Vegas.
We can do a spa day too for the ladies, maybe a special spa day with the traders.
Yes, definitely. We have to. It's going to be awesome.
All right. Thank you guys so much.
Sounds good.
Thank you, Jane.
Thanks. All right. And Leslie, are you there? All right. And just a quick reminder for everyone, while Leslie's getting set up, I am recording each of the presentations separately, and I'm working on processing the recordings. Those will be posted on timingresearch.com on the homepage. Also, if you subscribe to Timing Research on YouTube or your favorite podcast app, you can get live updates that way as well. And Leslie, are you there?